Hi guys, this is T.A. Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the today's class, we will be quickly discussing RTP for May 2024 with respect to CA final audit. Okay, without any further waste of time, let us start our discussion. Firstly, starting with integrated case scenario. I'll quickly read the case scenario, then we'll solve the MCQs. Mr. Ayush, proprietor of BCD & Co. Chartered Accountants, was appointed to audit the financial statements of Amrita Industries Private Limited for the financial year 22-23. These financial statements were prepared in accordance with Dutch GAAP. Okay, these financial statements are prepared as per Dutch GAAP, and the terms and conditions specified in the contract between Amrita Industries Private Limited and Dutch Industries BV. One of the terms and conditions of the contract was to get the financial statements audited from an independent auditor. Okay. The contract also stipulated auditors to take into account misstatements of 5,000 euros or more while framing their report. Any misstatement identified below this threshold did not require correction or adjustment in terms of stipulation in contract. While planning audit team had also determined performance materiality at 10,000 euros and overall materiality at 2 lakh euros. Now, basically, this engagement is audit of special purpose financial statements. Okay, financial statements prepared as per special purpose financial reporting framework. Now, SA 800 will be applicable for this engagement. Now, as per SA 800, even though management and the contracting party, even if they have agreed upon a materiality level, the auditor, he should determine his materiality and performance materiality as per SA 320. Okay. So even though the contract stipulates the materiality as 5,000 euros, auditor should determine his own materiality as per SA 320. Okay. So he has determined materiality and performance materiality. Yes, next. The following information extracted from general purpose financial statements of Amrita Industries Private Limited prepared in accordance with the provisions of Companies Act. Okay, this information has been extracted. Turnover of Amrita Industries is 300 crore for financial year 22-23 and 250 crore for financial year 21-22. Borrowings are 100 crore, 75 crores. Basically, based on this information, there is a MCQ that has been asked, which will ask you whether internal audit is mandatory for Amrita Industries. If you see, in case of a private limited company, Amrita Industries is a private limited company. In case of private limited companies, internal audit is mandatory if turnover in the previous financial year is exceeding 200 crores or the borrowings exceed 100 crores. Now, if you see, turnover is 250 crores, which is in excess of 200 crores. So, internal audit is mandatory for this company for financial year 22-23. Okay. We will solve that MCQ. We will read while reading the MCQs. Next, the borrowings from bank consisted of working capital credit facilities only. The company had been enjoying such credit facilities with a sanctioned amount of 75 crores in the financial year 21-22. The credit facilities were enhanced to 100 crores at the beginning of financial year 22-23. Okay. Outstanding balance in above credit facilities has never crossed the sanction limits at any time during each of the above year. Okay. In the previous year, the credit facility was up to 75 crores. Now, in the current year, it has been extended to 100 crores. Next, that was with respect to audit of special purpose financial statements. Now, from here, it is with respect to audit of general purpose financial statements. Now, Mr. Shubham, partner at BB and Associates Chartered Accountant firm, was appointed as engagement partner for audit of general purpose financial statements of Amrita Industries Private Limited for financial year 22-23. Okay, for auditing special purpose financial statements, BCD and Co was appointed. For auditing general purpose financial statements, BB and Associates was appointed. Okay, before finalizing audit plan, BB and Associates asked for internal audit reports. However, management informed him that there was no internal audit team or function in the organization. Okay, but if you see the limit of turnover, the internal audit is mandatory for the company. So, company must appoint an internal audit team. Next, during the course of audit of general purpose financial statements, Mr. Anand, as an audit executive, performed risk assessment procedure, test of control, and substantive procedure. He also performed tender analysis to compare the purchase of raw material. Basically, he has performed various risk assessment procedures. Okay, he also performed purchase, production, sale, cycle analysis to understand inventory holding. Besides going through the company's internal control manuals and visiting company's plant, inquiries were also made with the company's information system personnel. Okay, inquiries were also made with the company's information system personnel to provide information about control failures. Diligent inquiries were also made. Okay, various inquiries were made for the purpose of assessing the risk of material misstatement. Next, while issuing the report, BCD and Co. inserted an other matter paragraph in the audit report specifying the use of special purpose financial reporting framework for preparing and presenting the financial statements. See, if you want to communicate about use of special purpose financial reporting framework for preparing financial statements, you can discuss it in emphasis of matter paragraph because it is related to financial statements. This use of special purpose financial reporting framework is not related to audit. If it is related to audit, you need to mention in other matter paragraph. In the current situation, you need to mention it in emphasis of matter paragraph. Okay. On the other hand, BB and Associates decided to issue an adverse opinion on all financial statements except cash flow statement and an unmodified opinion on cash flow statement. See, they wanted to issue adverse opinion on all the financial statements except cash flow statement. Okay, with respect to cash flow statement, they wanted to give unmodified opinion, and with respect to other items of financial statements, they wanted to give adverse opinion. Whether this is possible? No, you cannot give a different opinion in the same report for one element of financial statement or one item of financial statement and a different opinion for remaining financial statements. That is not possible. Okay, you cannot use such type of opinion. Now, as per BB and Associates, the cash flow statement was prepared as per the required method and hence it did reflected the appropriate figures. Okay, but even though you cannot give such type of opinion, you have to either you have to give adverse opinion for the entire financial statements. You cannot give unmodified opinion for just cash flow statement and adverse opinion for the remaining financial statements is not possible. Now let us read the MCQs based on our first MCQ. The audit team of BCD and Co were not sure which materiality to choose to evaluate the effect of identified misstatements on the audit and of uncorrected misstatements, if any, on the financial statements in order to form an opinion and to conclude as to whether the auditor has obtained reasonable assurance about whether the financial statements as whole are free from material misstatements. Basically, the audit team is confused regarding whether they should use the same materiality that was agreed in the contract between the management and the respective third party, or auditor he should determine a separate materiality as per SA 320. The answer is the auditor needs to determine separate materiality as per SA 320 even though the contract is speaking about a specific materiality level. So let us see what first option is. In the case of special purpose financial statements, management may agree with the intended users on the threshold below which misstatements identified during the audit will not be corrected or otherwise adjusted. Okay, management can agree with the intended users in the contract for a materiality level, but the existence of such a threshold does not relieve the auditor from requirement to determine materiality in accordance with SA 320. Even though management has agreed upon a materiality level with the intended users, auditor needs to determine materiality as per SA 320. He should not give any importance to such materiality which management has agreed with the intended users. So for the purpose of planning and performing the audit of special purpose financial statements, auditor needs to determine materiality as per SA 320. So option A looks good. We will also read other options. In case of special purpose financial statements, management may agree with the intended users on threshold below which misstatements identified during the audit will not be corrected. Okay. The existence of such a threshold is sufficient or no? The existence of such a threshold is not sufficient. Auditor again he has to determine his own materiality. So option B wrong. In case special purpose misstatements based on consideration of financial statements needs of intended users are considered material pervasive. However, the auditor needs to follow threshold limit provided in terms of contract. No, auditor need not follow such threshold. Auditor he has to determine his own materiality. Next, the auditor is required to comply with each requirement of SA unless in circumstances of audit entire SA is not relevant. No. Sorry, what it says. Let us read it again. The auditor is required to comply with each requirement of an essay unless in the circumstances of audit the entire essay is not relevant or the requirement is not relevant because it is conditional and condition does not exist. In the case of an audit of special purpose financial statement, the requirement of essay 320 are not applicable in entirety. No, essay 320 is applicable even for the audit of special purpose financial statements. Okay, so option A is correct. Next, Mr. Manish, the audit manager of BCD and Co, objected to the insertion of other matter paragraph in the audit report. According to him, there is no such requirement to insert other matter paragraph to disclose the use of special purpose framework. Whether contention of Mr. Manish is in order? Yes, the contention of Mr. Manish is in order. Let us see which option is correct. Auditor's report on special purpose financial statement shall include other matter paragraph. No, it need not include other matter paragraph. Option A is wrong. To avoid misunderstanding, auditor shall mention that the financial statements are prepared in accordance with special purpose financial reporting special purpose framework and therefore may not be suitable for another purpose in the management's responsibility section. Adding an other matter paragraph for this will result duplication of no. For this, auditor needs to use emphasis of matter paragraph. He cannot just specify it in the management's responsibility section. No, you can't just specify it in the management responsibility section. Again, you cannot give key audit matter. Okay, this is not any key audit matter. You have to give emphasis of matter paragraph. See, the auditor's report on special purpose financial statement shall include emphasis of matter paragraph. Option D is correct. Next, Mr. Chitram, the audit manager at BB and Associate Chartered Accountant, is seeking your guidance in drafting separate opinion on the cash flow statement and other financial statements. No, you cannot give separate opinion for cash flow statement and a separate opinion for other financial statements. That is not possible. So, what it says, when auditor considers it necessary to express an adverse opinion or disclaimer an opinion on the financial statements as a whole, auditor report shall not include unmodified opinion with respect to same financial reporting framework on a single financial statement or one or more specific elements or accounts of the items of financial statement. Yes, if auditor wanted to give adverse opinion or disclaimer of opinion, such opinion should be given for the entire financial statements. It cannot be given only for part of financial statements and the remaining part of financial statements unmodified opinion. Such type of opinion is not possible. So option A would be correct. Okay. Next, I'm not reading remaining options. The company has violated provisions of Companies Act 2013 by not appointing internal auditor. Yes. Which of the following statement is likely to be correct reason necessitating appointment of internal auditor? Since the company has met the criteria with respect to turnover in the previous year, it needs to appoint internal auditor. Let us see. Company was required to appoint internal auditor. Yes, as it fulfilled necessary conditions relating to turnover during the financial year. Such internal auditor may have been either individual or partnership firm only. No, internal auditor can be either individual, partnership firm or a company also. So option A is not correct. Company required to appoint internal auditor as it fulfill necessary conditions related to turnover and the borrowings. No, borrowing criteria it has not fulfilled. It has fulfilled only turnover criteria. So option B also not correct. Company was required to appoint internal auditor as it fulfilled necessary conditions relating to turnover. Okay. Such internal auditor may have been either individual, partnership firm or body corporate. Yes. Option C is correct. Next, fifth MCQ. Mr. Anand, an audit executive, has performed various procedures during the course of audit. Yes, we have seen a various list of procedures he has performed. Now, of those procedures, which of the following procedure or combination of procedure is or not likely be considered as risk assessment procedure? Okay, from the following procedures, which is not a risk assessment procedure? Generally, risk assessment procedure will be in the form of either inquiry or as an analytical procedure. Apart from this, remaining all other will be not risk assessment procedure. Let us see. Performing trend analysis going through company's internal control manual. This is a analytical procedure. So analytical procedure can be used as a risk assessment procedure. So this is risk assessment procedure. Inquiry will always be risk assessment procedure. So option B is also risk assessment procedure. Communication with company's external legal counsel by sending letter of inquiry. This is not a risk assessment procedure. This is a substantive procedure. Okay, you are verifying existence here. So option C will be correct option, which is not risk assessment procedure. Okay, communicating with external legal counsel is not a risk assessment procedure. And finally, option D says inquiry. Inquiry will always be risk assessment procedure. So option C is the correct option for fifth MCQ. Next, independent MCQs. Safe Health Insurance Limited is a company working in the field of health insurance sector. Okay, it is now using a claim management system where incoming claims can be immediately identified on the website itself. A form is used to customer who signs it. The details are verified by the system against data present in it. Such system has allowed faster processing of claims. That means here, by using technology, they are eliminating all the manual work. They are automating all the manual work. This is one of the best example of robotic process automation. Let us error-free data validation and increased customer satisfaction. Now, which of the following technologies has likely been used? They are using robotic process automation. Yeah, option C. This MCQ, it is also given in the study material. Next, 7th MCQ. Bansal Arora & Co, a chartered accountant firm, is currently performing audit for Wool Limited, a sizable manufacturing company. Mr. Bhavesh Bansal, an experienced audit engagement partner, holds the responsibility of ensuring that audit engagement aligns with the professional standards, adheres to regulatory requirements, and complies with legal obligations. Okay, he is having responsibility for ensuring that the audit engagement will comply with all the regulatory requirements. Now, his duties encompass the overall supervision, direction, and final issuance of the audit report. Okay. Now, while conducting the audit, engagement team encounters a complex issue pertaining to valuation of company's inventory. Within the team, there are differences of opinions on how to address this matter, resulting in contentious situation. Now, what is Mr. Bhavesh's responsibility in this situation? Okay, they are facing issue with respect to valuation of company's inventory. Let us read the options. Now, in this situation, what Mr. Bhavesh has to do? Option A, Mr. Bhavesh shall adhere to firm's policies only for addressing and resolving differences of opinion. No, just following firm's policies is not sufficient. Mr. Bhavesh should enable proper discussions within the team and discussions with the external people so that this complexity in valuation with respect to inventory is resolved. So option A is not correct. Mr. Bave should secure management's representation concerning valuation. No, you have to resolve the complexities with respect to valuation. You can't just satisfy by getting management representation with respect to valuation. Option B is also not correct. Mr. Bhave should ensure that appropriate consultation occurs within the engagement team and if necessary with individuals at an appropriate level within or outside firm. Yes, Mr. Bhavesh, he should ensure that proper communication, proper consultation should occur within the team and with the people outside the team in order to resolve the complexities. So option C will be the responsibility of Mr. Bhavesh. Next, Alexa Private Limited has been operating in India for past 15 years with 3 group companies, 1 subsidiary in India and other 2 in Singapore and Germany. The acquisitions of these subsidiaries were gradual with control obtained after initial investments. Even this MCQ is also in study material. The statutory auditors have determined that all the group companies are significant for the audit of consolidated financial statements. Okay, they are significant for audit of consolidated financial statements. For the year ending 31st March 2023, the audited financial statements of components are available except German company whose audit has been delayed and won't be completed before the release date of the consolidated financial statements. Now the financial statements of German company for consolidation audit of CFS, what could be the possible situation? See, if auditor of consolidated financial statements doesn't get the audited financial statements of that German company, then auditor he cannot frame his opinion. So auditor needs to modify his opinion with respect to consolidated financial statements. Let's see which option will be correct. Since audit of German company is in progress, its financial statement subject to audit can be considered or no. The auditor of CFS, he cannot consider the unaudited financial statements of German company. If auditor does not receive audited financial statements of the German company, he should modify his audit report. Yes, he has to modify his audit report. Option B would be correct. Let us also see option C and D. Management should provide management accounts to the auditor of CFS or no. You need to provide audited financial statements. Auditor should exclude financial statements of German company from CFS. How can you exclude the financial statements of a subsidiary from the consolidated financial statements? You cannot exclude. So option B, you need to modify your audit opinion. Next, those were MCQs. Now moving to descriptive questions. Question number 9. While conducting audit of Quantum Mechanics Limited, Mr. Manoj, the audit manager, identified significant payments made by the company for legal and retainership fees related to litigation. The litigation pertained to the Tirunelli manufacturing plant situated on forest land reserved for the elephant corridor, which was declared illegally constructed. Okay, since the factory was illegally constructed, there is a case that is going on against the company, and for that the company is paying certain legal retainership fees. Now the company had received a notice to decommission the plant by 31st May 2022, but it had challenged decommissioning order in the high court, and matter was still pending there. Now the company had not disclosed any information relating to the litigation in its financial statements. See, if at all there is any non-compliance with law and regulation as per SA 250, then, and if it is material, you need to properly disclose such non-compliance in the financial statements. Otherwise, auditor, he can modify his audit opinion as per SA 250 for the financial year 2023. Now, the Tirunelli plant accounted for over 75% of company's annual production, and the audit team expressed concerns that decommissioning could significantly disrupt operations and potentially lead to bankruptcy. That is SA 570, going concern. This is one of the example of events or conditions that may cast a significant doubt on entity's ability to continue as a going concern. So since this event will cast a significant doubt, it needs to be properly disclosed in the financial statements, but it has not been disclosed in the financial statements. So auditor, as per SA 570 also, he should modify the opinion. Okay, if the item is only material, then he will give qualified. If it is both material and pervasive, then he will give adverse. So based on pervasiveness of the item, he will give either adverse or the qualified opinion, but in the first case he has to modify the opinion. So that will be your conclusion for question number 9. The audit was near to completion when Mr. Manoj sought advice from audit partner Mr. Shalab on this matter. He suggested that no immediate action was necessary from the auditors as matter was still pending in the court. No, if the even though the appeal was filed, this is a significant event and it needs to be disclosed in the financial statements. Since it is not disclosed in the financial statements, auditor needs to modify his audit opinion. Okay, so you need to refer SA 570 and SA 250, and based on that you need to modify your opinion. Next, question number 10. You are appointed as statutory auditor of Supreme Limited and are in the mid of conducting annual audit for the financial year ending 31st March 2023. During the course of audit, you come across a situation involving recording of purchases amounting to 1.5 crores from a company incorporated on 18th March 2023. Okay, you found that a entry has been passed with respect to purchase of certain material worth 1.5 crores from a company. Upon further inquiry, you discover that purchases have been booked at the instance of one of the directors. Okay, when you further investigated into the matter, you found that these purchases were not actually made, but this entry has been made in the books of accounts based on the communication of one of the director of the company. Now this situation, it falls under SA 240. auditor's responsibility relating to fraud in an audit of financial statements. Okay, there is a possibility that management can conduct fraud by overriding the controls, and one of the way for conducting for doing such fraud is by passing journal entries, fictitious journal entries, that too at the close of the financial year end. This is one of such fraud. Okay, now further, despite this entry in books, no payment was made and there is lack of documentary or other evidence validating these purported purchases. Okay, for this entry, no payment was made. Okay, for this purchase, no payment was made to the vendor, and also there were no supporting documents. In the books of accounts, you are just finding a entry and there are no supporting documents. And you found that this entry was made based on communication made by a director of the company. So how would you deal in the given situation? Now, as per SA 240, if there is, as per Companies Act 2013, section number 143, subsection 12, if at all there is any fraud against the company by its officers or employees, and the amount involved in the fraud is more than 1 crore rupees, you need to communicate the same to central government. So reporting under section 143 subsection 12 comes into picture. And also, as per Caro, if at all there is any fraud by the company or on the company by its employees or officers noticed or reported during the year, you need to disclose the amount involved in the fraud and the nature of fraud in Caro 2020. Okay, clause 11. So these two reporting requirements you need to refer along with SA 240 for this answer. Okay, that is question number 10. Next, question number 11. While assessing the impact of uncorrected misstatements in the audit of Manhattan Constructions Private Limited, Mr. Sushil encountered a significant issue related to the calculation of materiality on sales. Okay, materiality means SA 320. Now, the initial materiality calculation was based on estimated figures provided by the management. Okay, notably during the estimation of full year sales, the management extrapolated from the actual amount of 11 months to derive the 12 months of sale. Okay, while calculating initial materiality was calculated based on the figures that are provided by management for 11 month sales. Okay, management has provided 11 month sales to the auditor. Now auditors, based on these 11 months sale, they have extrapolated it to find out the sales for entire 12 months, and based on that extrapolated figure, the auditor have determined materiality level, initial materiality level. But however, given the nature of Manhattan Constructions as a company in the construction sector where monthly sales exhibit substantial variations, a unique challenge emerged. Actual sales for the last month deviated significantly from the estimated sales due to unforeseen increase in the stamp duty rates imposed by government in that region. As a result, the last month's actual sales represented only 25% of estimated sales. Okay, but the actual sales have reduced. Now if the actual sales have reduced, the auditor should also revise his initial materiality level that he has calculated based on estimated figure of sales. Okay, SA 320 permits the auditor to revise the materiality that has been initially calculated based on the further information that he derives during the audit. This is permitted in SA 320. So by using that SA 320, auditor, he can revise his materiality level, he can revise his initial materiality level. Now if auditor revises his initial materiality level, and the new materiality level that the auditor has obtained is less than the old materiality level that the auditor has determined, then auditor should also reconsider the performance materiality. Hope that is clear. So here, as per SA 320, auditor, he can revise the materiality level. Hope that is clear. That should be your conclusion for 11th question. Next, 12th question. Brown Enterprises Limited has huge funds locked up in its trade receivables, standing at around 100 crore as on 31st December 2023. Okay, the management of the company wants to evaluate validity of the trade receivables to ensure reliability of financial reporting at year end. Okay, the auditor they want, sorry, not the auditor, the management they wanted to verify whether these 100 crores of debtors actually exist or not. Now, for this purpose, the accounts department has provided a list of trade receivables to the management containing about 1,000 names, their balances, and the contact or communication details spread in different parts of the country. Now, the company's management has requested CA Karuna to take up this assignment and prepare a report for management in accordance with professional standards. Okay, despite not being statutory auditor of the company, she decides to accept the above engagement. Okay, even though she is not a statutory auditor of the company, she has accepted the engagement. You can accept the engagement, there is no issue with respect to that. Okay, standard on related services as per SRS 4400. Okay, agreed upon procedures. You can the auditor, if the chartered accountant, even though he is not auditor of the company, he can accept the related services of the company. So by explaining nature of engagement describe above, discuss whether it was proper for her to accept such engagement. Basically this becomes agreed upon procedure engagement. Okay, agreed upon procedure engagement as per SRS 4400. Let me once check whether the standard number is correct or not. 12th one, right? Yeah, SRS 4400. So agreed upon procedure engagement is an engagement in which auditor will perform agreed upon procedures on agreed upon item. Okay, the management and auditor they will, on the first hand itself, they will determine what procedures has to be performed by the auditor and on what items these procedures has to be performed. Based on this, the auditor he needs to find out the facts and he needs to communicate these facts to the management. So for taking up this engagement, you need not be auditor of the company. Okay, any chartered accountant he can accept this agreed upon procedure engagement. Hope that is clear. Now, while reporting, which precautions should be taken by her so that readers of report do not misunderstand its scope? Okay, now in the report that CA Arna gives, she should clearly mention that this engagement is not audit engagement. So I will not be giving any assurance. I will be just providing you the facts. And if at all I have performed some more procedures, I could have determined some more misstatements in the financial statements. Even this, line she needs to mention in the report. Okay, and she should also clearly mention that this report it can be used only by the intended users. Okay, only the people who have been agreed upon to conduct this engagement, only those people can use this report. Why? Because apart from those people, other people they cannot know what was the agreement between management and the CA or not, that is the auditor. Okay, because auditor and management have agreed upon certain procedures. Only those procedures will be performed by auditor. So other people, the third party, okay, other users, they will not be having an idea of what procedures have been agreed between auditor and management and on what items these procedures will be performed. Okay, that third parties they will not be having any idea. So this needs to be clearly mentioned in the report, stating that this report will be useful only for the agreed people. Okay, next question number 13. Star Limited has outsourced its payroll processing functions to a service organization, Little Solutions Private Limited. Little Solutions Private Limited is responsible for accurate preparation of payrolls and timely remittance of statutory dues to the government authorities on behalf of company. Little Solutions Private Limited controls related to timely remittance of payroll deduction to government authorities or relevant to company, as late remittances could result in the interest and penalties resulting in liabilities for the company. Okay, this is the user entity, that is Star Limited, is using the services of a service organization. Here SA 402 comes into picture. SA 402 and SAE 3402 also comes into picture. Now, the auditors of Star Limited want to be sure about description, design, and operating effectiveness of controls at the Little Solutions throughout the year. Okay, the payroll services of Star Limited are being performed by the service organization, that is Little Solutions Private Limited. Now, the auditors of Star Limited will be interested to know whether controls at the service organization are working properly or not. Why? Because if the controls are not working properly, it might result in penalties on part of the user entity. Okay, so the auditors of Star Limited wanted to be sure about description, design, and operating effectiveness of controls at the Little Solutions throughout the year. So, in this regard, they require an assurance report from the auditors of Little Solutions Private Limited. Since they also wanted assurance on operating effectiveness, Type 2 report will be relevant here. Okay, because Type 1 report, it will not speak about operating effectiveness, it will just speak about design and description of the controls. So Type 2 report has to be obtained. Okay, now let's see what are the questions that they are asking. Why the auditors of Star Limited require an assurance report from the auditors of Little Solutions Private Limited? Which engagement and quality control standard cast such kind of responsibility upon auditor? Obviously, why they are requesting for the assurance report? Because they needs to get a assurance on the controls that are operating at the service organization. They need to assess the risk of material misstatement. So for this purpose, they are asking for a assurance report. And here SA 402, as per SA 402, you need to obtain such report. And which type of report should be provided by the auditors of Little Solutions, and justify the reasons. Here you need to provide Type 2 report. Okay, why Type 2 report? Because they also wanted assurance on the operating effectiveness. Next, state matters on which opinion is to be provided by the auditors of Little Solution. Okay, opinion has to be provided on the three aspects. First one, whether the description of the system fairly represents as is present in the service organization, and whether the control objectives with respect to the controls that are specified in the system are properly designed or not, and whether the controls are working effectively or not, operating effectively or not. On these 3 points, assurance has to be provided by the service auditor. Okay, as per SAE 3402. Hope that is clear. Next, question number 14. Certain studies have suggested that increase in cyber attacks and rise in, see, this is basically a direct question with respect to common risks for blockchain technology. Okay, what are the risks of blockchain technology? You can, okay, straight away uh, go through this from the study material. Okay, in the concise book I have given it in the form of points. Okay, let us just quickly go through them. Risk of blockchain. First of all, inability to reverse the transaction. Okay, in case of blockchain technology, you cannot reverse the transaction, and also in order to access the data, you need to have the public and private keys. Okay, without having proper keys, you cannot access the data. This is one of the risk. Next, operating through network nodes could expose organization to cyber attacks. Okay, blockchain will be operating through various nodes, that is, the information will be available with various parties. If information is available with various parties, then confidentiality might be lost. Okay, this is also one of the risk. And auditor should ensure that organization has necessary data management process and compliance with laws and regulation. Okay, these are some risks with respect to blockchain. That is basically a direct question which you can go through it. Next. Yeah. Question number 15. PDSJ and Associates are statutory auditors of Scheduled Commercial Bank for the year 23-24. While evaluating internal control over advances, it came to their notice that classification of term loan borrowers accounts into SMA as well as NPA is done in the system on the following lines. Let us see. In case full dues are not received on particular due date, borrower account is immediately considered as overdue on the very next day. Okay, it should not be considered as overdue on the very next day. It should be considered as overdue on the same day. Okay, at the closing of the same day. For example, if due of loan account is on 31st March 2023, okay, on 31st March 2023 loan amount is due, and dues are not received as on 31st March 2023, and if you don't receive such due amount on that due date, that is on 31st March 2023, it shall be considered as overdue on 1st April 2023. No, it should be considered as overdue on 31st March itself. But the bank in this situation is considering this amount as overdue on 1st April 2023, which is wrong, because now if you don't receive amount on the due date, then while closing of that day, the system will have to automatically mark that account as overdue on the closing of that day. Okay, in the closing hours of that day itself, the system has to mark the account as overdue, but it should not be carry forwarded to the next day, and in the next day you should not mark it as overdue. On the same day, in the closing hours of the bank, you need to mark it as overdue. So on 31st March 2023 itself, you have to mark it as overdue. So in this situation, the banking company marking it as overdue on 1st April 2023 is not correct. Next, if it continues to remain overdue, then account is tagged as SMA on SMA 1 on 1st May 2023. No, if account is overdue for more than 30 days, then it will be marked as SMA 1, right? So from 31st March 2023 till 31st May 2023, it becomes 30 days, right? So in the closing hours of that 30th day itself, you need to mark it as SMA 1. You should not again wait for the next day. So here you need to mark it as not 31st May, 31st March, 31st April. Sorry, 30 April. On 30 April itself, you need to mark it as SMA 1. You should not wait till 1st May. Next, if account is overdue for up to 60 days, then it will be tagged as SMA 2, right? So here again, it should not be tagged on 31st May as SMA 2. On 30th May itself, okay, on the closing hours of 60th day itself, you need to tag it as SMA 2, and same applies even for NPA also. On 29th June 2023 itself, you need to tag it as NPA. Okay, so this point you need to mention in your answer. The current procedure that the bank following is wrong. This procedure the bank has to follow. Next, audit of public sector undertaking. Question number 16. C&AG appointed Saha and Associates, a chartered accountant firm, to conduct performance audit of Herbal Limited. Performance audit means you will verify 3 E's: economy, efficiency, effectiveness. Okay, a public sector undertaking of Government India. Now, the firm conducted the audit with a view to check that all expenses of the unit are in conformity with the public interest and publicly accepted customs. See, you will check whether expenditure is in public interest and publicly accepted customs or not in case of propriety audit. Okay, in case of proprietary audit you will check this, you will not check this in the performance audit. So C&AG has appointed Saha and Associates to conduct performance audit, but they have conducted proprietary audit. Now the audit report submitted by the audit firm was rejected by C&AG. Obviously C&AG will reject it because they have appointed you to conduct performance audit and you have conducted proprietary audit. Obviously C&AG will reject the audit report. Give your opinion on the action of C&AG. Yes, C&AG is correct in rejecting the opinion. Reason, the because they have performed proprietary audit instead of performance audit. Okay, next question number 17. CA Sanjana has recently joined as Chief Internal Auditor of Upscale Limited, a listed company. Her subordinate staff in Internal Audit Department brings to her knowledge many prior audit issues highlighted in the previous internal audit report which were still open. Okay, in the previous internal audit reports various points were raised, but none of them have been resolved by the management, still they are open. Okay, now this has been brought to the notice of CA Sanjana, who is new chief internal auditor. Now does she have any responsibility in this regard? Obviously she is having responsibility in this regard. She needs to monitor and follow up whether all the issues that have been raised in the previous internal audit reports have been resolved by the management or not, whether all the previous issues, whether they have been implemented by the management or not. Okay, basically CA Sanjana, she needs to prepare action taken report, and if at all still any of the issue is still open, she needs to, you know, advise the management to act upon it as early as possible and to resolve that issue as early as possible. So that will be the responsibility of Sanjana as chief internal auditor. Next, question number 18. SEBI has made business responsibility and sustainability report mandatory for certain listed companies. It is an evolutionary step in environment, social and governance reporting. Discuss the nature of ESG reporting. Basically in case of ESG reporting, you will communicate how much value addition you have made to each of three aspects. That is, with respect to environment, what value addition your company has made during the year. Okay, how much energy have you consumed. Okay, and what steps have you taken to safeguard the environment. So how much reduction in water consumption you have made, so how you have contributed to environment, this needs to be reported. Next, social, that is how you have developed relationships with the existing customers or existing vendors, and how you have fostered those relationships. With respect to that you need to report. And finally governance. Governance is what are the internal policies and procedures that the organization is following for conducting its own business, for managing its own business. So with respect to these three areas, what value addition the company has made during the year, it needs to be reported in ESG report. And in ESG report there will be qualitative reporting as well as quantitative reporting. Okay, in case of quantitative reporting you will speak in terms of numbers. Okay, you have saved some 50,000 gallons of water. Okay, you have reduced this much amount of carbon emission. So in terms of numbers you will speak in case of quantitative reporting, whereas in case of qualitative reporting you will speak in terms of narrative disclosures. Okay, what policies you have followed, what procedures you have followed, what actions you are going to take in future in order to preserve environment, or in order to develop a proper governance in the organization. Like this, in narrative description you will disclose in case of qualitative disclosure. Okay, basically this answer you can just go through the answer. Okay, the points that I have explained you, that you can find in the answer. Next, question number 19. Comment on the following with reference to provisions of the CA Act. CA Pankaj accepted professional work of acting as valuer under direct taxes, he charges fee on percentage of property valued. See, generally a chartered accountant in practice will be deemed to be guilty of professional misconduct if he accepts or if he charges or offers to charge for any professional work fees which is based on a percentage basis or which is contingent upon future findings. This is as per clause 10 part 1 schedule 1. But however, there are certain exemptions that have been given by the council. One such exemption is, in case you have been appointed as a valuer, then you can charge fees based on a percentage of value of the property that you have valued. So in this situation, CA Pankaj, he will not be guilty of professional misconduct because he has been appointed as valuer, and for this service he has charged fees based on percentage of property valued. This is completely allowed. Next, CA Anita joined as an audit executive in CA firm from 1st April 2023. Despite receiving multiple reminders from ICAI, she has failed to respond. See, as per clause 2 part 3 of schedule 1, you will be deemed to be guilty of professional misconduct if you don't respond to the information that has been asked by institute or council or of any of its committees. Okay, so as per clause 3, sorry, clause 2 part 3 schedule 1, you will be deemed to be guilty of professional misconduct. And this above one, clause 10 part 1 schedule 1. Okay, next, Mr. Johnny, a chartered accountant, was invited to a seminar on bank audits to give presentation on the process of conducting such audits. During his presentation, he provided examples from his client's experience and shared significant information about the clients with the intention of aid in understanding of audience on the topic. Does above situation have implication in relation to professional ethics? Yes. As per clause 1 part 1 schedule 2, you will be deemed to be guilty of professional misconduct if you disclose the information of the client without obtaining his prior consent. Okay, so in this situation, Mr. Johnny, he will be deemed to be guilty of professional misconduct. Next, question number 20. CA Tanya, auditor of KBC Private Limited, has delegated following works to his articles. Basically, this is with respect to clause 12 part 1 schedule 1, wherein you cannot allow any person other than member of institute or a chartered accountant who is your partner to sign on your behalf any balance sheet or profit and loss account or any report or financial statements. But however, certain regular day-to-day documents, you can delegate the signing of regular day-to-day documents to your two persons other than your partners. Now if you see first point, issue of audit queries during the course of audit. Okay, signing of this audit queries, this work can be delegated. It need not be signed only by CA. This is the delegation of, you know this the delegation of signing of this document to articles and staff is okay. Next, issue of memorandum of cash verification and other physical verification, even this can be signed by articles or staff. Letter forwarding draft observation or financial statements. Okay, see, here it says draft financial statements. Draft financial statements, they can be signed by staff. Issuing acknowledgements for records produced, even acknowledgement they can be signed. Signing of financial statement of company, you cannot delegate this signing of financial statement to your staff or articles. So with respect to fifth point, CA Tanya will be deemed to be guilty of professional misconduct under class 12 part 1 schedule 1. Okay, just a second, whether this clause is okay. So yes, by this we have completed discussion of RTP for May 2024 examination. Okay, in the next video I'll also be discussing MTP. Okay, I'll be winding up this video as of now. Take care, bye bye, see you.